Hey everyone, welcome back to Corporate Decoder, the place where we try to uncover if a company is really cooking the books or just having a bad day. Today we are diving into GSR through Accession Corp, and let me tell you, this filing is packed with some interesting financial maneuvers, especially around their upcoming business combination. It looks like they're raising a significant amount of money through a private placement, and we're going to break down what that means and why it matters. So, what is the big deal? Well, GSR through Accession Corp, or the company as they call themselves in this report, has entered into some serious deals. They've agreed to issue and sell quite a bit of their ordinary shares and warrants to institutional and accredited investors. This is all happening as part of a larger plan to combine with another company called Terra Innovatum SRL and its associated entities. Think of it as a precursor to a merger where they need to secure funding. The core of this filing revolves around what they're recalling the PIPE financing. PIPE stands for Private Investment in Public Equity, and it is a common way for companies to raise capital quickly. In this case, the company is looking to bring in about $31.8 million. They've signed what are called subscription agreements with these investors. This is where the investors commit to buying a certain number of shares and warrants. The filing tells us they are selling ordinary shares, which are like the regular ownership pieces of a company, and also warrants. Now, these warrants are a bit like an option to buy shares later at a set price. They've got two types here: half warrants where investors can buy shares at $12 each, and quarter warrants where they can buy shares at $16 each. These warrants give investors a chance to profit if the company S stock price goes up. Let S talk numbers. They are selling approximately 3.18 million ordinary shares at $10 per S hair. This alone gets them about $31.8 million, exactly the target we saw earlier. So the core of this financing is all about getting cash in the door at $10 a share. Along with those shares, they are also issuing half warrants that could allow investors to buy up to about 1.6 million more shares. Then there are the quarter warrants, which could allow for the purchase of almost 800,000 shares. These warrants come into play if the company performs well. The exciting part for investors is that these warrants are ready to be used right away, and they have a good 5 years to decide if they want to buy those shares. This gives investors a long runway to see how the business combination plays out. This whole private placement is tied very closely to the main event, the business combination itself. It is expected to wrap up at the same time as that merger, meaning the company needs this money to finalize its big step. Now, for a bit of detail on how the sale is happening, they are doing this without registering the shares with the securities authorities. This is allowed under certain rules, like Section C of the Securities Act, which basically says that if you're selling to sophisticated investors who can fend for themselves, you don't always need to go through the full registration process. These investors are deemed accredited, meaning they meet certain income or net worth requirements, or they are not based in the US. The company also put out a press release to announce these deals, which is pretty standard. This is to make sure all investors, big and small, get the same information at the same time, and it is part of what is called Regulation FD. Looking at the actual documents attached, we get a clearer picture of these half warrants. They give the holder the right to buy shares at $12, and they have those anti-dilution clauses. And here are the quarter warrants. These also allow for buying shares, but at a higher price of $16 per S hair. Both types of warrants are designed to protect investors and give them upside potential. This document here is the actual agreement outlining the terms of the investment. It details exactly what is being sold, to whom, and under what conditions. Finally, we have the press release providing a more public-facing announcement of this PIPE financing. It is designed to inform the market about this crucial step in their business combination. So, what is the big takeaway here? GSR through Accession Corp is essentially raising critical funds through a private placement to fuel its upcoming merger. They're reselling shares and warrants to sophisticated investors who are betting on the future success of the combined entity. The $10 per S hair price for the ordinary shares in this private placement gives us a benchmark valuation for this particular transaction. Now, let's put on our Warren Buffett hat and analyze this. The company is engaging in a common strategy to fund a significant transaction. The fact that they are raising capital through a PIPE suggests that traditional financing might not have been as readily available, or this was simply the most efficient route for them. The dual warrant structure with exercise prices at $12 and $16 indicates a tiered approach to potential upside for investors. If the stock price shoots past $16, those warrants become very valuable. However, there are always risks. The success of these warrants hinges entirely on the post. Merger company performing well. If the business combination doesn't deliver expected results, these warrants could expire worthless. Also, issuing a significant number of new shares and warrants can dilute the value of existing shares if not managed carefully. We need to watch how the post-merger company manages its capital structure and if it can generate enough cash flow to support its operations and pay down any debt. Right now, the focus is on the initial capital infusion to get the deal done. The real test will be in how the combined entity performs financially in the coming quarters and years. In essence, this filing is a snapshot of a company in transition, securing the financial bedrock for a major strategic move. The investors are betting on a future growth story, and the company is relying on this capital to make that story possible. Alright, that is our breakdown of GSR Threed Accession Corp. S latest filing, what is your take on these financing deals and what they signal for the company? S future, drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into corporate documents. Don, don't forget to check out the Discord in the description. Thanks for watching. See you next time.